Hello and welcome to Funded Futures. My name is Emily, I'm your host, and today I'm joined by Alan Jones. Alan Jones is a general partner at Mate Ventures. He is a founder coach, he is a radio host and a t-shirt designer. Welcome to the podcast.
Oh, thank you so much for having me on.
Actually, the first time we met, we were on a panel together and I was unaware of the t-shirt designer element. And we had question time at the end and someone asked you, oh, what's your favorite t-shirt? And I was like, well, am I missing something? What's this t-shirt element? I mean, how does that play into everything?
I had a difficult lockdown during the pandemic, as I think we all did. And one of the things that I had to adjust to, I do some mentoring with some accelerator programs in Australia. And at that time, I was working hard with the Remarkable Accelerator for people living with a disability, tech solutions in that space, and also the Startmate accelerator program. And when a program's underway, like the personal relationships between people are really important. And we all had to figure out how to maintain those personal relationships on video calls. Not for the first time, because we were all in tech and we'd all used Skype before, but it was still pretty unfamiliar to run a program that way. And one of the things that people kept forgetting was to unmute themselves on a group call.
It still happens.
Yeah. So I designed a t-shirt that just said, "You're on mute."
Brilliant.
And I could just wear the t-shirt and just sort of lower the camera or raise myself a little bit to bring that into shot. And then somebody, without interrupting the flow, could see, oh, that must be me. And they could unmute themselves. Other people saw that t-shirt and liked it and wanted their own. So I started designing t-shirts and I sort of t-shirted my way through the pandemic. So I have a website now called Communitees.
Brilliant.
And there's about 30-something designs on the shirt now. I didn't want to become a t-shirt entrepreneur, so I divert the profits from that to a Melbourne-based charity called the Asylum Seeker Resource Centre, the ASRC, that does awesome and essential work to support people seeking asylum in Australia, people without the right to work, without the right to Medicare, without the right to send their kids to school. And they're just a fantastic grassroots organisation, entirely volunteer, no government funding whatsoever. So that's another little side passion.
Right, because I was going to say, is it those who can't do teach, and that's why you're a founder coach, but obviously you can't
When
do.
you see my t-shirts, actually, you'll see that I can't design. So most of my t-shirts are just white Helvetica text on a black t-shirt.
That's really funny that you say you can't design, but you are a t-shirt designer.
Yeah. I lay out the type very carefully. I think about the kerning.
I imagine that you do. I feel like I'd be terrible at that. So I'll leave that job with you. That's so fine. How do you even get into kind of founder coaching in the first place? Obviously, you've been in startups and investing for a really, really long time.
Yeah.
What made you get into coaching founders?
I think it's important to understand that I'm very, very old, that my tech career started before there was a World Wide Web, right? So I had a career as a tech journalist originally, and one of the things you do as a journalist in any kind of journalism is you interview people and you try and get to the story. And that skill comes in handy later on in all sorts of different ways. And so now as an investor, I spend some of my time interviewing founders about their startup to kind of see if I can get to the truth about what's going on in the business and form an opinion for myself about how well it might go. So I was a startup founder until the 2008, 2010 kind of period. And what I was doing at that time was having a lot of coffees with founders, and I was just offering them advice or seeing if I could help. And I would do it for the price of a coffee, but you can only have so many coffees in the course of a day before your head explodes. And startup founders, particularly at the early stages when they really need support and advice, can't really afford to pay. So I had to experiment with different models for years and years and years to find something that might be useful to founders and also worth my time to do. And really how it works now is that I think by being very reachable and by being accessible to founders, I can broaden a network of people who might one day latch onto something that will become a big success. And if I've been helpful and useful and accessible in those early days before they were famous, then maybe there's an opportunity there for me to call a favor back in return and get allocation in an investment round or find a job for a friend, or introduce them to a potential co-founder or a senior hire that they're having trouble placing. So for me, it's a networking game, but not in a negative, toxic, private club kind of way. It's like, who can I help and how?
I think the startup ecosystem in Australia, it feels very small and very tight-knit. At every event that you go to, you're going to see a lot of the same people, and they know a lot of the same people. Everyone's kind of in that realm. How do you keep it from getting super cliquey? And, when you watch an Australian film and it's all the same actors over and over again, it feels like the same in the startup ecosystem. Do you know what I mean?
Yeah,
you go to a panel, it's the same person every single time.
Yeah. Toni Collette broke out of Australian television and films, and now she gets to appear in film and television in other markets. But for them, for the rest, I know exactly what you mean. I tend to not go to the sessions at Australian conferences, and tend not to, be a speaker or be a panelist. And I've just come back from this awesome South Start conference in Adelaide, or sort of starts in Adelaide and then it goes to the wine regions of Adelaide. So
sounds awful.
I can highly recommend going to South Start if you haven't been before. But I'll typically go to a conference and not attend any of the sessions, and so that's one way to avoid the clique. And then I'll find a mechanism. The South Start conference offers something. So it was the networking hub this year, where you could create a profile on their conference app and make yourself available to sit and have a chat with people who are looking for help.
Oh, I love that.
So I spend most of my day at that, which is a little bit exhausting. But with any sort of practice, the more you do of it, the more fluent you become, and the less energy and effort it takes, and perhaps the better you become at it. So at South Start, I was mostly sitting at a little table or at a series of little tables, having 30-minute chats with people, and that's actually my happy place.
It's a long day.
Yeah, but there's always drinks at the end of it at South Start. So that's
it's always drinks at the end of my day as well. We have that in common.
Healthy nootropics, with lots of lion's mane mushrooms and.
Oh, obviously, always. Like, health is wealth. It's my body is a temple.
It's ruined temple in my case.
I think this has been an interesting kind of turn of rhetoric lately in the startup ecosystem. A lot of investors are saying, I wouldn't invest in a startup founder who is constantly at events and talking on panels and, at awards ceremonies and putting themselves forward for awards, because it's taking them away from actually building their business. What are your thoughts on that?
I think it's very difficult to build a valuable company out of the strengths and weaknesses of just one person. And I generally tend to stay away from organizations that are very visibly represented by just one person, because there will always be a relative weakness that one person has. I like to invest in teams because I think humans are tribal by nature or family group by nature. And I think that humans work better in small groups than they do as individuals. I think there are a few very prominent individuals on the world stage at the moment in business who have damaged their own mental health and well-being by trying to be everything about that organization and take it to the world. And it's not good for anybody. So I'd rather back a team any day where there's one person who's a great communicator and very social and who feels approachable and accessible and confident. But that person is also supported by a number of other specialist people who are great on the back end, people who are great at operations, people who are great at building a stable and healthy and accessible people culture in the business. And then obviously some people who are building greater technology, because technology businesses are my personal passion too.
Why technology businesses specifically?
Well, in most kind of industries, there's a relationship between the operating cost of the business and the revenue and the profit from the business, which is those things can't be decoupled. So I met up with some angel investors here in Melbourne last night at a great little pub in Melbourne, and we were talking about that. And if you're investing in the owner of a pub, what you'd hope to see would be you see some seasonality in revenue and profit over the course of a year, but you'd hope to see kind of steady growth. Kind of the more predictable the growth, the better. And you would expect to see the growth in revenue with a corresponding growth in operating expenses along the way, right? And that makes a hotel investor comfortable and happy and ready to proceed, right? But in tech, there's this weird thing where we can use software and hardware, which is controlled by software, to decouple that relationship between revenue and profitability and operating cost. And at the moment, we're seeing that in the application of AI to all kinds of businesses, where all of a sudden there's always been this ratio between their operating cost and their revenue and profit, and add AI to the mix, and all of a sudden maybe you change this. They're still coupled, but you've added 50% more revenue and profit on top of that operating cost. Or in some cases, it's entirely decoupled altogether.
Yeah. Obviously, there's been a huge influx of AI and deep tech coming into the technology space. How do you see that influencing early stage investment in startups, particularly in the tech space, going forward?
As always, there's always a yin and a yang way of looking at it. So I spend part of my time very anxious and part of the time really optimistic and excited. So the anxiety comes from, I started angel investing in tech startups in Australia and New Zealand about 2008, 2010. So I now have a portfolio of 50 or more active investments in Aussie and New Zealand tech startups, which is great. But some or a significant part of the value of those companies the last time they raised money was based on the fact that their businesses are difficult to copy.
Yes, and strengthen that IP.
Yeah. So a business is people, a business is customer relationships, and then in technology businesses is also how hard it would be to build a copy of that technology platform that they have. And I worry about AI coming in and disrupting that sort of moat, that technology moat. How hard will it be in 5 years' time to say, I'd just like to compete with Uber. Just build me an app that works exactly like the Uber app. And yes, I've got marketing and distribution and customer relationship challenges to face if I choose to do that. But actually building the tech will be super cheap and super easy.
So there's no first to market advantage, essentially. That will be eliminated.
Yeah. In fact, maybe the opposite of that.
Yeah.
There's more to benefit from copying people who were first to market and second to market. So that's what makes me anxious.
I never actually considered that. That's a really interesting thought.
Yeah, there are apps around, and video demos on YouTube that you can watch where somebody just says, just go make me a copy of this business. And, the AI will take 8 minutes maybe to get to the MVP version. And there'll still be buggy, there'll still be things to work out. And of course, you still need to build a business on top of that tech. But it used to take millions of dollars to build technology platforms. What changes about a world where maybe it costs $30 to do the first version and then maybe an operating cost of $2,000 or $3,000 a month once you actually get customers on the platform?
Yeah, right.
So with all great disruption comes great opportunity and excitement as well. And so the other side of the yin-yang equation is it's now possible for me, if I get my head around it, to consider investing in a one or a two person startup that might be able to get to a few $1 million in ARR in its first year with just those two people. So if I'm the first or amongst the first to get proficient at evaluating the potential in a two person team that might build a $10 million business in their first year, there's all this opportunity available to me before. I used to have to evaluate if you were two co-founders aiming to build a $10 million business. I used to have to, one of the things I would look at would be, how great are you going to be at recruiting the next 4 or 5, 6 engineers and designers and developers you will need? How much do I believe that you'll successfully get to a team of 50 people before I see a $10 million business out of that? If we can postpone that, or if we might never need that, if it's possible to build a $10 million ARR business out of two people, that's a very interesting opportunity if we know how to get good at it.
Yeah, right. And I guess that you're probably quite attuned to finding a company and, assessing whether it's going to be a good investment or not. Do you think that your assessment strategy has changed in the way that you assess these companies now before you go investing in them?
It's changed enormously over the years. like most angel investors, when I started angel investing, I wasn't really seeing it as my career. It was a side gig. It was a hobby as much as anything, like a personal passion that I thought maybe I might be able to make some money from. And over the years, it's become my job. It's my career. It's what I do. But it's only recently, surprisingly recently, that in my iCloud folder structure, I've got my work stuff in one top level folder, and I've got my personal stuff in another top level folder. And it was only recently that I realized that all of my investments, all of my records and all of my investments were still sitting in that personal top folder. I hadn't moved it across to the work folder, right? So most angel investors, I think, stay enthusiast, hobby investors for their whole. Not many of us make the switch to do a full time, but at some point in that journey, you have to figure out, I'm going to need to take that investment hypothesis part of what I do much more seriously than I did before.
Okay.
So we all start out with like gut feel and do I like this person and do I believe that this business could be a thing when it's mostly just an idea at this stage? And we often don't look back on the decisions that we made in a startup. We haven't taken notes on why we made the investment decision in the first place. And so 3 years later, when it fails, we've only got a fuzzy recollection of why we invested in the first place, just full of regrets that we did it, right? So it can take quite a while. But at the end of the day, there's really four things that most of us look for, and I'm no different to anyone else. The first thing we're looking for is a rock star team. I hate the phrase, but everybody understands what I mean. A rockstar team ideally is a team of people who've worked together before to build a kind of similar startup that was commercially successful, and now they're going on to do their next thing. Okay. So in the Mate Ventures Angel Syndicate that we're running on the Aussie Angels platform, we just did a deal like that. So we backed a founder who'd been commercially successful in building another edtech startup, and now they're going again with their next one. Because Australia and New Zealand is relatively new as a technology industry, you don't get to see those opportunities very often. But when somebody comes to you and says, and we've got a rockstar team, usually it's because one of them used to be a 5-year veteran engineer at Google, and another one perhaps was in marketing and communications for Birchall, and another, and maybe they've only known each other for 6 months, or of the team of 4, 2 of them went to high school together, but the other 2 are just kind of new highs that they found during an accelerator program. So then that's what they would pitch to me as a rockstar team, and I keep my mind open, but it's not really a rockstar team most of the time. So that's number one. Number 2 is unique and commercially applicable or valuable intellectual property. So that can be something around a new business model that somebody has. So I would argue, for instance, that a lot of the value in Uber and Airbnb was not so much the technology part of what they built, that was relatively simple, but a change to the way this business model usually works in getting from point A to B in somebody else's car. And also, where I stay when I'm traveling for business or on holidays. It was really the business model intellectual property that was valuable in both of those things. But you can also build a valuable technology business, obviously, out of the commercial value in the tech IP as well. Right. So that's number 2, unique, commercially valuable intellectual property. Then number 3 and 4 are the 2 that are hardest to show without the help of investors, but sometimes you see startups achieve that, and if they do, then that's very interesting. So customer growth and revenue growth. So a rockstar team, unique, commercially valuable intellectual property, rockstar growth in customers, growth in revenue, and everybody who's looking to invest in a company is looking for an opportunity to believe that something might be able to go exponential in those last 2 things. Right. That customer growth over time has 3%, 5%, all of a sudden it ticks up to 15%, and then maybe it goes to 24%, and early stage investors will jump in and go, okay, this could be it. This could be the point, the inflection point. And because we don't manage a sovereign wealth fund, we won't be able to afford to invest by the time it's clear that this is exponential growth. So we have to all sort of pick our point of risk and reward on that graph. But when we see a company that has that rockstar team, that has something really innovative in the business model or in the technology, and then if we see early evidence that maybe it's about to go nuts, then if we have the available capital and the time, then usually we're in.
Interesting. So when you're looking at startups as well, I mean, the statistics show that either mixed gender teams or female founded teams do tend to generate better returns on average. Do you consider that when you're investing in a company, if they've got a mixed gender team or if they're just male founded?
Yeah.
How do you think about that?
Yeah, it's really important to Emily and I. Emily Rich, my co-manager in Mate Ventures. Emily and I met at a venture conference where the two of us felt we had more in common with each other than most of the other people who were at that venture conference. There's kind of a template to venture capital. A bunch of people with MBAs that went to good schools, that worked at Morgan Stanley or a big law firm, and now they're kind of keen to get into venture capital because they think they can make a lot of money that way, and they're wearing Allbirds and Patagonia vests and all that kind of thing. And we're two tech nerds. I used to be a head of product. Emily was a head of engineering, and we connect. But another thing that connects both of us is that we identify with the outsiders, and we've been part of diverse teams that outperformed because our team were diverse. It might sound odd to hear a middle-aged white man talk about identifying with outsiders, but actually I moved a lot when I was a kid around the world with my family, typically about every 2 years. So I lived in 28 houses and one boat before I left home, and I was always the new kid at school.
Yeah.
I had siblings, but I had two younger brothers, and so I was kind of the point man on every introduction to a new school and social circle. So I always had the wrong hair, always listening to the wrong music, or didn't know the slang that everybody was using, and so I had to kind of feel like an outsider most of the time and try and work my way in. And by the time I was part of that new group, my family would move again. The whole thing would start again. So I've always identified with the outsider, and Emily does too. The data shows very clearly that more diverse teams outperform less diverse teams when given a group task. And building a startup is always best done as a group task. So for our investors, it just makes financial sense. We are more likely to get an outsized financial return if we back more diverse teams. And we see a lot of genuine effort from the venture capital industry, from individual angel investors, from syndicates, genuine effort to try and do a better job of backing a more diverse portfolio of companies. We go about it in a slightly different way. So we have an explicit mandate: no diversity, no dollars.
I love that.
And most diversity in startups starts at the bottom up. An organization gets to a certain size where you've got a few hundred employees maybe, and you realize that you've got a diversity problem, or rather a lack of diversity problem. You might have a toxic male culture, or not be serving customers well in markets where not everybody is Anglo and Christian. And you realize you have a problem, you need to go about and solve it, and you look at your own workforce and you see, oh, actually we're all a bit of a monoculture here.
Yeah, right.
Most organizations will start with trying to change the diversity of the people who apply for a job at the company. But nobody really wants to be the first antelope in a room full of lions.
Yeah.
It takes an extraordinary amount of courage to be the first woman to join an all-male team, or to be the first person of color to join an all-white team, et cetera, et cetera. So we try to work with our portfolio companies on diversity that starts at the top. Because we're early-stage investors, we're usually investing in companies that don't yet have a formal board. There will be a time to set up a board of directors. And one of the many things that founders don't have a lot of time for is recruiting for a great board.
Yeah, absolutely.
Usually they'll take shortcuts. You're already on my cap table. You've got more experience than me. Could you please be a director of my company? And so one way that we can help is we can say, okay, you're not ready to form a board yet, but it's coming pretty soon. Can we agree that we will help you appoint some board directors? And it typically won't be Emily or I. It will be someone that we've known for a while that can bring diversity into your board. When you look at an organization and its decision making and its power structure, the leadership team and the CEO work for the board. So if we build diversity in the board, then it should reflect later on diversity in the leadership team. Because every early stage business, 2 or 3 co-founders, everybody's wearing a number of different hats. Some of those hats look good on you and they're very flattering. Other hats don't look so good at you. So for me, very uncomfortable for me to wear the CFO hat. Very uncomfortable for me to wear the chief legal officer hat. So that more diverse board can help a set of co-founders find a more diverse leadership team. And then when people are considering which employers to apply for a job at, they're going to see an organization that reflects more people like them, more diversity in the culture. You're going to see your success rate in hiring more diverse people in new hire positions in the company. Your success rate is going to go up because they don't feel like the first antelope walking into a room of lions. They feel like, well, people like me are represented here already in decision-making positions. So we're often investing in teams of only a couple of people. And obviously it's not fair to expect them to already have a board and to already have a fully fleshed out people and culture, hiring policy. But we can work with a company from the beginning and we can help them change that over time. So we will usually come to an agreement on what we're going to do together in a company where we're investing in a team that doesn't yet have sufficient diversity.
Okay. So when you're prioritizing your business strategies when you are an early stage startup, how do you factor that in, ensuring that you've got a diverse team and considering that as a major value point in your business when you're also trying to juggle, actually generating revenue and starting to grow as a company? How does that factor in?
Yeah. I think the first thing to keep in mind is that startups can't succeed by doing things in serial. And I mean serial not in terms of granola, but in the electrical engineering sense. So when you're designing a circuit, you can have little solder patterns that go one step at a time. First you run something through one component and then next component and next component. And you can do it another way where you have things run in parallel, where you have several devices next to each other and you run several processes at once. So the way that startups can grow into a successful business is not by doing the way a big enterprise would do it. They would do things in a serial way. So if I'm a big 4 Australian bank, a lot of the value of my business and my market cap is tied to the general perception, the value of my brand. And so risk becomes very important and avoidance of risk becomes very important. And so large organizations tend to work in serial because they want to do all of the planning they can do before they actually execute. And then when they're in execution phase, they want to make sure that the execution works flawlessly, so absolutely nothing goes wrong, so that no customer loses their money. And then after execution phase, you want to make sure that you're optimizing as best as you possibly can. So large organizations tend to compete by working that way, by taking it one step at a time. Startups don't have time to work that way, and they don't have the luxury of doing that. They'll be outcompeted by other startups that are working in parallel. So the first important thing is to understand that you can't be, first I'm going to do this, and then I'm going to do this, and then I'm going to do that. You can only do it that way if you're running multiple processes at once. So at the same time as spending a bit of time meeting investors, at the same time as spending a bit of time figuring out how my customer acquisition strategy might work by testing marketing ideas, at the same time as I spend having coffee with people who I hope that one day I might be able to hire. At the same time, you're right. So what you have to do as an early stage startup founder is to always be swapping hats and making a little bit of incremental progress on multiple things at once. Then the other way that startups can outcompete enterprises is that they can be much more ruthless about prioritization. So let's take the topic again of making sure that we're creating a more diverse workforce. So in a large enterprise, what we might have to do is deal with all the different categories of diversity at the same time, and also our SDGs, our sustainable development goals, and reducing our carbon footprint and all of those things all at the same time. In startups, we can sometimes be pretty ruthless and say, we're a team of 5 people. We can't do everything in diversity all at the same time. But let's look at, 51% of the Australian population are women. So how about we address gender diversity first? And after gender diversity, how about we go, okay, a large proportion of the Australian population don't speak English at home, have English as a second language, or are people of colour, or whose parents were migrants. How about we start with ethnic identity diversity afterwards, seeing as that's the next most common form of diversity in Australia. And then we'll get to people living with a disability, and then we'll get to people who don't identify as binary gender or sexuality. So a startup can sometimes afford to be ruthless in the short term in order to grow more quickly, to create an organization that can then think and act like an enterprise.
Right. Honestly, I would never start my own business. This sounds so stressful.
Don't do it.
No, I'm convinced. Don't worry about it. Okay, you don't need to tell me not to do it. I won't be. I just interview startup founders because I find it so interesting that you'd want to put yourself through this torture. It is hard work. And a lot of the time when I interview founders, they say, if I had have known how hard this was going to be, I wouldn't have done it. I wouldn't have started this business because it is such a slog. What advice would you give to startup founders who have heard those stories again and again, but really want to start their own businesses and want it to be as easy as possible?
I would have so much advice. The first thing that I would say is that before you begin, recognize that you may succeed, you may fail, and only a small percentage of what has happened to your business when you look back on it will be down to you. So great businesses and great entrepreneurs fail all of the time through no fault of their own. Your idea was excellent, you built a great team, you did a lot of hard work in finding customers for this. You designed a great product or service that those customers really loved. But then you still failed because of external forces, because of, an economy slipping into a recession, or a larger, more established company loving what you were doing and coming in and outcompeting you with their extra capital and people resources. So I've many times over the years been a co-founder in businesses or an investor in businesses that have failed, I don't think, through any fault of our own. So by all means, care and love your new business as if it were your child, but accept that
that child might die.
Maybe not that the child would die.
That feels like super dramatic.
That was a terrible way. Yeah, don't think about it as a child. Think instead about it as a business, but accept from the beginning that you're going to do your best work and you'll try your hardest, and maybe you'll have some late nights and some 7-day weeks, but at the end of the day, it could still fail. So why that's important is that you should go into it loving the work, not the outcome.
Right.
Because the odds are that the outcome will be unsuccessful no matter how hard you try, and no matter how talented you are, and no matter how much experience you bring to the problem, and no matter how early customers love it, you will probably still fail. So if you don't go into it looking forward to the learning opportunity, looking forward to testing yourself at things that you never really thought you could be great at, if you don't look forward to sharing your business with co-founders and getting the love and the joy of working together as a team, sometimes it really is all about the friends that you make along the way. If those rewards aren't going to be sufficient for you, then I don't think you should start the business.
That's a really interesting take. Such an interesting take that you kind of have to enjoy the moment while it's there, just in case it is fleeting.
Yeah.
But very true about, I think, a lot of these businesses, it's through no fault of their own that they do fail, and it's such a shame. I think the one that comes to mind for me is Sheba, and it was an incredible business doing super well. The mission behind it was something a lot of people could get behind. A lot of people who were using it, they needed their kids picked up from school, and they needed to know that they trusted the driver who was taking their kids. And then, the pandemic happened and they couldn't operate and they went under, and it was such a shame. But it's in those moments that you realize it is no fault of your own that a business might go under, but there's often times when you've got to have the ability to pivot and shift in a changing environment. You do see a lot of businesses that still refer to what happened during COVID. I mean, you design T-shirts, for example.
Yeah. Women's safety in crowd transport solutions. In fact, in transport solutions, like it happens on trains and trams and buses all the time as well, right? So women's safety in transport places has always been a major issue, and Sheba was a really good solution to that problem. Let's curate a really carefully vetted network of women drivers that our customers can trust with their kids, with themselves late at night, and sometimes the macroeconomic changes can actually be a government decision or a trade war with another country that takes a business out. Other times you get a black swan event like a pandemic, and you can't always just pivot your way through those unexpected events. And so I have nothing but respect and no judgment at all for those businesses that I've seen fail through those black swan events. On the other hand, I've also seen some really remarkable pivots that have succeeded. So don't discount the fact that you might be able to pivot your way out of this mess. There's a startup that am I able to name a startup?
Yeah, go for it.
Cool.
I just did.
That's true. There's an awesome company, Australian company called GeoSnapshot, that got started by recruiting pro-am sports photographers. So people who had all of the gear but no professional background as working for AAP or something at the tennis, but were really keen on taking photographs of sports people. And GeoSnapshot would use those crews of semi-volunteer photographers to go cover sporting events that are hard by nature for professional photographers to cover. So if there's a footy match, everybody's focused on what's happening on a field, and the game plays for a couple of hours. There's some stuff to watch, and then the photographers get to go home. So it's relatively speaking fairly cheap to cover from a photography background. But if you're covering a 3-day equestrian event in 4 different locations, or if you're covering 70 or 80,000 people running the City to Surf in Sydney, or if you're covering a triathlon event that might cover 150 kilometres of an island of Hawaii, making sure there's a photographer at every point along that journey and keeping them there for the 3 days that it takes to do the event, that gets really expensive. And so those events were often really poorly covered by photographers. So that's where GeoSnapshot started. But then, of course, we had this pandemic, and all of these big outdoor events and all of the audiences that follow them just stopped overnight. And I thought, GeoSnapshot's probably a startup that I will look back on and say, well, that was a great team, executing really well. It came up with a really clever idea. And through no fault of their own, they failed. Is exactly what we were talking about a second ago. But GeoSnapshot managed to pivot into school photography. And so those end-of-year photos that every parent and grandparent, inevitably pays too much money for. And it was a thing that GeoSnapshot came up with. So they were early into facial recognition, so that when you were running a large public marathon event and there's 40,000 other competitors, you don't want to go flipping through web page after web page of photos to find a photo of you. So GeoSnapshot had a thing where you could upload a selfie of yourself, and it would find all the photos of you from the tens of thousands of photos at that event.
That's genius.
Right? So that became really, really helpful in doing school photography as well, because of course school photographers have a major headache. I've just shot 2,500 kids at a high school, and now each parent is, paid me quite a bit for their photos, and now I have to go through all those libraries and line up kids and photos and make sure that 100% of the time that each parent gets the correct photos of their kid and not anybody else's. And
that actually did happen to me when I did my debutante ball. Don't judge me. This is not my fault, obviously. I was forced into this. And I got a DVD of another girl, another Emily. And I was like, what do I want this for? What am I going to do with this?
Go. Your name's Emily. What's the problem?
Exactly. What am I complaining about? But this could have been avoided if this technology had existed.
Yeah. And of course now there are many more blended families, and there are also separated families. And sometimes there'll be one parent that shouldn't have access to their birth children's school photographs because of a divorce or a custody battle or something like that. And now GeoSnapshot is able to work with the school's administrators and make sure that exes don't get access to photos of their kids that they don't have the rights to, and also any parent that doesn't want their kid's photo to appear in the whole year photo, or any individual photos at all, a parent can say to the school, no photos of my kid, please. And GeoSnapshot can just automate that whole process and make sure 100% of the time their kid never appears in school photos. So coming out of the pandemic, they had a whole new line of business, and then they were able to go back to those mass sports event organizers as well. And so, I'm a big fan of obstacle course racing, the Tough Mudder and Spartan Race and things like that. And so now I'm able to go back to GeoSnapshot after an event like that and pick up all the photos of me covered in mud.
Oh, that's another one of my worst nightmares, along with starting a business. Would be running an obstacle course.
No, it's really, really fun. For marketing reasons, they talk up a lot, about how it's all strength and toughness, and you have to be really tough to do this thing. I find it to be like a really playful experience for adults. It's really fun. Maybe the elite wave, like the top 50 competitors, maybe they're taking it seriously, and
which is a bit cringe.
It is a bit cringe. But the vast majority of people who do these things are out there for a great fun day with their friends, throwing mud at each other, helping each other over climbing a thing, or cheering each other on when they manage to move across a rope to the other side of a muddy creek. I find it to be like really, really, really celebratory and fun.
Okay, I feel like I've been influenced by you.
Are we
going to throw that on your LinkedIn as well, influencer?
I think everybody should try an obstacle course race. I don't think it's necessary, to start going to boot camp religiously every morning or to a CrossFit class to do it. I think you'll find that everybody else at that event is going to help you along and applaud you when you make it to the other side of something that you didn't think you could do. I think I think everybody should be doing obstacle course races.
All right. I think that's a great point to finish on, is that you think everybody should be doing obstacle course races. I feel like I could talk to you all day, but sadly...
There might be a metaphor, between starting a business and doing an obstacle course race.
I like it. I feel like we could blend it in. It makes sense. But thanks so much for coming all the way to Melbourne, having a chat with me. I feel like you've got so much wisdom to impart on startup founders, and not necessarily just founders, teams, people who want to get involved in startups and want to be part of those teams. I think it's brilliant. Thank you so, so much. And I'll pop your LinkedIn link in the bio so everyone can get in touch. So hopefully you don't get inundated. But thank you so much for coming.
Inundated is my happy place. Thank you.